Welcome back. Mild recovery from the lows for the markets, Nifty 7660, while the Bank Nifty has trimmed its losses and now down about 0.5%. But let's shift focus to the personal finance segment. Hemant Rustagi is our expert. Hi Hemant, good afternoon. Our first query is an SMS sent by Afzal Alam. He has written to us from Patna and he wants to invest 50,000 rupees for 6 months and he wants to know what his options are and the best ones. What would you respond?
Well, I think since the time horizon is roughly around 6 months to 12 months, there are two important factors he needs to consider before deciding which option he should be investing in. One is the safety of capital, and the second important factor is the tax efficiency of return. So if Afzal is in the tax bracket of, let's say, 20 and 30%, he should be investing in some tax efficient investment option like arbitrage fund. Now, these are the funds which basically take advantage of arbitrage opportunity that exists in the cash and derivative market. Since these funds do not take open position in the cash market, they're quite safe. And for tax purposes, these are treated as equity funds. So since his time horizon is 6 months or thereabout, he should opt for a monthly dividend option, which practically will make his return tax-free. Some of the fund in this category that he can consider investing is Kotak Equity Arbitrage Fund or ICICI Equity Arbitrage Fund. But if he is paying tax at the rate of 10%, then he can look at a pure, debt option. In this category, he can look at ultra short-term fund. Now, these funds typically invest in short-term debt instruments and money market instruments. Some of the fund in this category that can be considered are Reliance Money Manager or, Equity Floater Long-Term Fund.
Okay, Afzal, so that's the advice for you. It depends on which tax bracket you fall in. So the answers there are very different. Thanks. Okay, Hemant, we've got one more query. Ranjan Das has written to us from Bhubaneswar. He would like to invest 5 lakh rupees for a time period of 4 to 5 years. Again, we're not too sure about his existing investments or his tax bracket. But, this time for a longer period, what would you advise?
I think, again, the key factor here is the time horizon. Since he's talking about 4 to 5 years, yes, he can, take some amount of risk and invest in an aggressive asset class like equity, but of course it has to be a mix. So ideally, I would recommend to him a combination of a debt-oriented hybrid fund and an equity-oriented hybrid fund. The best thing about investing in a hybrid fund is that, you can decide how much exposure you want to equity and debt. At the same time, in hybrid fund, because the fund manager keep rebalancing the portfolio from time to time, your asset allocation doesn't get really distorted from the level that you want. So some of the funds in these categories that can be considered are HDFC Prudence Fund, ICICI Balance Fund, or Birla Sun Life asset allocation moderate plan. So as a combination of these two, I think would be apt for him.
Thanks, Hemant, for giving our viewers those options. Thanks so much for joining in. Again, just to reiterate, it's settled for the markets, Nifty 7660, and the bond yields also have eased a bit, so now at 8.55, and Europe, by the way, has opened up in the green with gains of about 0.5%. So I think that on the sidelines is providing that bit of support. But here's where we wrap on Halftime Report. Thanks so much for watching. Business Lunch takes all the action.